future. We're talking real money.
Well, look at that. We're still here. We're still talking money. We've been doing it for so long, I don't know that we could do anything else. I think it's just, it's an addiction with us.
Sad, yet true.
It is kind of sad and, yes, true. Hello, everyone. Welcome to Talking Real Money, the radio show that becomes a podcast next week. I'm Don McDonald in beautiful, lovely, actually really lovely Florida.
This time of year is the time, be there, sure. Yeah.
I mean, yesterday we were sitting out on the porch. It was 72 degrees and just sunny, bright blue skies.
Dude,
Sorry,
it's been sunny and 72 here for like 3 months. So
no,
you're not.
It's been
hurting
smoky.
Us. Well, okay. Well, there's that, but still.
I guess
lack
that was
of precipitation.
That was the price you paid. Yeah, we did have more than our share of precipitation. You had smoke.
Yes, you did.
You had smoke. We had Ian.
Thanks for dropping by.
Yeah, and bye, Ian. Bye-bye. Bye-bye. Bye-bye.
Yeah.
855-935-TALK is a really important, critical phone number that will bring you to us so that you can ask questions of us about money, which the two of us have been talking about and managing and helping people deal with for decades. In fact, probably more than our combined. I mean, more than the combined time is more than one of our ages. We're in the 60s of years.
Yeah, that's probably about right. Yeah, and by the way, make your calls now because at the bottom of the hour we have a very special guest. Very special.
Really?
Yeah.
Okay.
I don't make this stuff up. Well, some of it I do, but not this time.
You make up a lot of it.
Yeah, but not this time. Okay,
all right, so give us a call, 855-935-TALK, 855-935-8255. Do you buy equities? Do you invest in stocks? I kind of get the feeling, but, we have a flawed, a skewed perspective. Not flawed, but skewed. We hear from people all the time who own stocks we hope they don't own individual stocks, but we hope they own equities through a mutual fund or an ETF. Lots and lots of people. We think it's very good for you and your future. You just have to do it the right way. But apparently, I thought that over half of America invested in stocks. Was I wrong?
No, I think there a time it was that, but now according to a new Gallup survey, it's 41% say they have no money invested in the stock market. So that would suggest that there's 60%.
A lot of people got out recently because it seems to me a couple of years ago, I remember it was over 50% were invested in stocks.
I think that's right. Yeah, I think that's right. So, no. Remember, it's 41% say they have no money invested. So it's 60% that do.
Oh, okay, good. Okay, that was right. Okay,
feel better now?
Yeah, I feel better now. So, 41% do not invest in stocks. What do they say? What they invest in?
Well, I was going to tell. If you want to call and tell us, I'd love to hear it. I think it'd be fascinating.
You're a non-stock investor. Where do you put your money if you're a non-stock investor?
We'll get to one in just a moment. A lot of people say they don't have the money.
Okay, I get that one.
Yeah, sure. One 38-year-old high school teacher says, I've been saving my money to pay off my remaining $93,000 on my mortgage. I'm going to invest it in my home. Then I won't have a mortgage payment anymore.
Excuse me, sir. I have a question for that guy.
Yeah.
He teaches? Did he mention a 403B?
He thinks that he mentions that he's going to have a pension. It does not say. Generally, you can have a pension and still invest in a 403B. Yeah, you could do both.
And wouldn't from our perspective, I just want to clear this up, wouldn't investing in a 403B be a whole lot better than paying off a home mortgage?
Well, it would for two reasons for me. Number one, depending on when you got the mortgage. If the mortgage rate is, like
2.5, like us.
Yeah. Right. Then you would better off putting the money in an investment account that grows at a rate greater than that. Number two is when you get to retirement, which may be a long time for Michael, who's 38-year-old high school teacher, you got no liquidity. You need liquidity in retirement. You need, money to pay the bills. You're going to have this asset, this house. Well, that's great, but it doesn't spin off any dividends. whereas a portfolio would, or you could take money out of the portfolio. So there's that. And the other reason I find this fascinating, the people they talked to for this article, a lot of them said, well, I don't do it because I've seen X and he looks panicked and freaked out because he owns this and it goes up and down. And the whole worry of the thing, don't want to be involved.
Don't own individual stocks, and that will reduce that greatly. That right there. I want to talk more about this in the future. 855-935-TALK is our number.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255. That spells talk. Give us a call anytime, actually, 24/7. But give us a call on Saturdays when we're here live on News Radio 1000 in the Seattle area. 855-935-8255. And we'll try and help you better understand money, avoid being ripped off, do this thing right. And when we talk about one of the things that affects people when it comes to owning individual stocks is the fear factor. Absolutely. But it's more prevalent when you're dealing with individual stocks. That's where the volatility can be extraordinary. I mean, wow, off the charts extraordinary. In fact, Tom just recently heard from someone who had one of the worst I've ever heard.
It's one of the worst me too.
For ownership
frankly.
of an individual stock. Mm-hmm. What happened?
Yeah, and this was options that were issued by
stock options?
company. Stock options, correct. And the value of those went up to $800,000, which for any of us is a lot of money. Well, I guess not a lot of money for Jeff Bezos, but for me, that'd be a whole lot of money. And she didn't know I don't think she started thinking about selling those. And then the company acquired another company and it kind of went down again, et cetera. And today, those options are worth $50,000.
So from $800,000 to $50,000.
And her question to us was, should I sell them?
I could tell you what my answer would be.
Your answer? Yes?
My answer is, yeah. I don't care if it's 50. What are you going to – let's assume for a second you hold on to those.
Yeah.
And it goes back up. When are you going to get out? Are you going to be happy at 60,000 or at 100,000? Or are you going to wait to get back to 8?
That's fair. That's fair. I mean, my answer was, is this an important part of your retirement? She's in her late 50s.
Yeah. And is it?
Well, at 800 it was.
No, but even at 50,
even
at 50 though. Even at 50, and can she afford to see that go to zero?
Can she afford to see it? Yeah, that's fair. So I sort of straddled it. I said, take half of it out, build a diversified portfolio, leave the other half in the hopes that this turns around. By the way, this stock is picked by Kathy Wood of the proclaimed ARK funds as the comer. It's coming, Don. Just got to wait.
It came and went. It did. I mean, she maybe she bought into it really well, but the fact of the matter is, I don't think she even got out when it was at its peak.
No, it was way up, and now it's way down.
And that's the problem, Tom.
And that scares people.
You're such a people pleaser. You're looking for the Solomon approach.
I see.
I'm gonna split the baby because I know what you want me to say. You want me to say, that could come back for you. But the reality is, any stock that can plunge from 800,000 to 50, can plunge from 50 to 0.
Oh, it's happened.
It's happened. And it could happen again. I would never, ever, ever have is that $50,000 1/100th of her portfolio?
No, it's a bigger part than
bigger than like 10% of her portfolio.
Yeah, like 10%.
Then that's real money. You see,
it is.
That's what.
I agree.
Can't
afford to lose it? Yeah.
Can you afford to lose it all? I know it hurts that it went from 800,000, but all that did that proved our theory. That absolutely proved our theory that you cannot know. No one rings a bell and says, oh, it's as high as it's going to go. Get out. And no one rings a bell. This is the perfect price to buy it.
for her, she's going to have carry forward tax losses for a long time.
Well,
so that's not really
that's
funny, but it's true.
Such a terrible
anyway.
thing. At least there's some consolation. 855-935-TALK is our phone number. Sarah, welcome to Talking Real Money.
Hi, how's it going?
Good. Now that you called, it's far better than it was.
Oh, perfect. I like how you talk. So I have a question about an inheritance.
Tom's taking notes.
Go ahead.
Okay, so I'm gonna get probably $100,000, and
Oh, wait. Can I want to play psychic for a minute. Can I play psychic?
Okay.
Okay.
Yeah.
You're going to ask, what should I do with it?
Well, I was gonna say, should I go to the Bahamas or should I invest?
Yes.
Yeah, we like the first one. Yes, let's go to the Bahamas.
Don doesn't like to travel. Is there a bus that goes to the Bahamas?
Is there
He wants
Bahama
a bus. He wants the Bahama Mama bus.
Probably.
Yeah, probably.
Oh, you're
Cruise
funny.
ship, maybe.
She's funny. Should I go to the Bahamas or invest it? Tom, what's your answer to that question?
The answer would be invest it.
Okay,
that was
thank
tough,
you.
but I had to really think it
There was
through.
more to the question, though. I'm sorry I interrupted. I was
go
just
ahead,
making a
Sarah.
point.
Sure, go ahead.
Oh, so I'm 45, working, married. He works too. Couple of younger kids. Like, what's a good route if you're going to get? We don't need that money, but what would be a good 20-year plan, or what would you do if you got that money?
Here's a starting place. What is roughly your household income?
About 150.
Okay, this to me is a no-brainer. The first place you would go for each one of you would be a Roth IRA.
Mm-hmm.
Okay.
And you can put away...
And we have some of that already, too.
Okay. I would make those contributions immediately out of that 100,000. That to me is a no-brainer. And then I might even keep a certain amount to make the 2023 contributions, because that's coming up in a few months.
Yeah.
I always forget, is it for the youngins, for people at 45, how much is that, Donna? Let's see, it's 6,500, is that right? No, 6,000. 6,000.
6 and 7,
6,
yep.
Yeah. So 6,000 times 2 is 12, times 2 is 24. There goes 24,000 right there. Do you have an emergency fund?
Yes.
Okay.
And what's that worth, roughly?
The emergency, I think it's like 45.
That's great.
Yeah,
great,
that's more than enough.
Yeah.
Because then the question sort of becomes, what other, do you want to look at the other part of this money for retirement, for the kid? There's an aspect
She said
of
a
what the
20-year
purpose
plan.
of the money is. Well, then, after the 2 Roths, because that takes away basically a quarter of it, I would, put it in a, brokerage account, manage it for a fairly amount of risk.
Yeah, what I would probably do is put that $12,000 a year, $24,000 over 2 years, into a Roth IRA at some place like Schwab, which Schwab would be great. Put it in there, get that aggressively invested, and but before you aggressively invest, I would encourage you, as a matter of fact, I would plead with you to please go take the risk quiz at talkingrealmoney.com so you get a feel for your tolerance for risk. If your risk tolerance is high, you could do something as simple as either the Vanguard Total World Stock Index, VT, or the Avantis Total Market ETF, which is AVGE, which is a little bit more aggressive. Both have terrific diversification, and you could let those ride. And by the way, they have very low tax ramifications down the road. So those funds could go in both the IRA and the regular account outside of the IRA.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
We were talking about the contribution limits to a Roth IRA. Those change next year. Oh, by the way, our number, call us, 855-935-TALK, 855-935-8255. So next year, Roths go from $6,000 to $6,500
per person,
which means she and her husband could put away $25,000 over the course of 2 years.
$12,000 this year for 2022 contributions, and then $13,000 for 2023 between the two of them. Yeah.
And the other place where the IRS has made some big changes
this
is in
huge.
the contribution limits to 401ks.
Yeah. So you were doing, what was it, 19.5, and now next year for 2023 you'll be able to contribute $22,500 per person, of course. But for the really old people over 50 years old, those of you still alive over the age of 50, shocking.
There are only a couple of us.
There's 3 or 4. That's going to go to $7,500. So you'll be able to put away, I think I have this right, $30,000 into your retirement account at
my
work.
math comes out to 29.
22.5 plus 7,500.
22.5. You're
Yep.
right. 30,000 round.
$30,000.
Oh, my
That's a lot of
contribution's
money.
going up next year.
Yeah, me too. So that's by the way, interesting. In this article, they mentioned that 14%, according to Vanguard, 14% of participants saved the maximum amount in 2021. So
That's actually a lot higher than I would
think that
have
I've
thought.
seen before. Mhm.
Yeah,
so that's not
a
bad.
pretty high number. So
Yeah.
there will be better opportunities, tax-advantaged opportunities to invest next year. But remember, sometimes we put the little tax cart in front of the making money horse. You know, the horse is the one making the money. The cart's just kind of coming along behind. And
I'm going
that's
to do a Winnie there, but I'm not going to. So
Winnie the Pooh.
you're better Winnier than I
No,
am.
that's me.
There you go.
That was like a cackle. That was one.
More timely.
Very timely. What was I going to say?
So,
anyway,
you're
because
saying
because
people have a tendency, they say,
Yeah.
well, but what about taxes? What about them?
that's where these wonderful, wonderful, wonderful growth-oriented exchange-traded funds shine. Because when you own those in a non-tax advantaged account, just a regular brokerage account,
Which Sarah
Schwab or
should have
Fidelity.
one.
Yeah.
We were trying to talk about that. Yeah.
When you own those, you do not, no matter how much the fund grows in value, you do not pay, just like an IRA or a 401k, you don't pay taxes on that growth until you sell the ETF.
Correct. I mean, unless there are dividends.
Right.
interest,
Now, you
things
get
like
dividends
that,
if there are any dividends paid out, but that
Yep.
dividends typically are a tiny portion of the total return of equity.
Sure.
The average annual return for equities over the past 100 years has been a little under 10% per year. The average dividend payout over that time has been in the 2%.
Yeah, it's
2
around
plus
2.
range. So the bulk of your return comes from the growth, and if your growth is not taxed along the way, you're growing on dollars that weren't taxed. And the other nice thing about that kind of an account is you don't have to start taking withdrawals.
Nope, there's no time you have to take that money out. So going back to where we started with all this, the point of the matter is when you get close to the end of the year, which is coming up pretty fast here, you need to adjust your the amount that's coming out of your check that's going into your retirement account. And you can, as I said, save $19,500 if you're under the age of 50. If you're over the age of 50, with the catch-up, you can save all the way up to $30,000 next year, that's quite a bit.
Yeah, the only thing I hate is that for the first time in my life, in the past couple of years, literally the past 2 years, I've made more than $200,000 a year.
Yeah.
Really, first time in my life. And I'm really bummed because I can't put any money in a Roth.
Well, you can do a backdoor Roth.
I know I could do a backdoor Roth, but
Yeah.
I can't do a real Roth.
Sorry.
I know. That's all right.
You can still have whatever you'd like for dinner. How's that?
I can have
you're
cake?
Grown up now.
I don't.
You can
You know,
have
I'm
cake?
not a big fan of cake. I would have pie.
I'm more of a cake guy.
You're a cake guy. I'm a pie guy. Give me a berry pie.
Special guest coming up.
Very,
Stay with
very
us.
good. Those pies. 855-935-TALK.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hello again. Welcome back to Talking Real Money. I'm Don McDonald with Tom Cock, and we're waiting on a special guest if the phone would get answered. please.
Pretty please?
Is the phone ringing?
I don't know.
Is our special guest calling? Do you know that he is?
Yes. He just texted me, said he was.
He was calling and he's waiting for somebody to answer the phone?
That's right.
So since neither of us are in the studio, we actually have to go on the air and say, can you please answer the phone? Please? Because our guest is there that we were planning on doing in this segment.
Come on.
Oh, he's on. You want to introduce him?
Yeah, I do. Actually,
Wait, no, wait! Don't talk. Don't talk until you get introduced, sir.
Yeah, don't.
She.
I mean,
what kind of presumptive guest is this?
Very presumptive. Very few people are dedicated to others in their retirement. Most of the time, it's about them, right? Because you just got done working all those years for other people to make a living.
They don't want to do anything.
But this guy has just gone on like the Energizer Bunny, and I won't tell how old he is, but he continues to write. He continues to have a podcast. He continues to do classes, speaks all over the place. He's got a relatively new book, and he and I are going to do a class here 2 weeks from today, and he's our friend as well, so we're honored to have on Talking Real Money.
That's nice.
Yeah, we are. Paul Merriman.
Nice.
Paul, thank you for joining us.
Paul Methuselah Merriman.
It is great to hear your voice. I've been calling for over 5 minutes. In technology, I guess I've just learned what a phone is.
Calling is old technology, Paul. If you were up on this, we'd be using Zencaster or something, but we're using the old phone.
I like
thing.
that. I like that.
Yeah.
Well, I'm happy to be with you however I got here.
Well, we're happy to have you, Mr. Merriman. And now you are...
So
what?
What's up?
Well, no, I was going to ask you what's up.
What's up?
What's up with the Merriman Educational Foundation?
No. Okay, I'll do this because I'm better at the interviews than Don is. Paul, we've now suffered through.
I don't want to ask him about that. What does
months.
that have to? He doesn't care about the market.
Yeah, he does. He actually does.
I'm trying to get him some. I'm trying to plug his educational thing.
We'll let him do that later. 10 months of a bear market now. We're down 20% basically with stocks. The S&P 500 is down 20.3% through yesterday, to be exact. What the heck? What should we be doing about this?
Well, Tom and Don, a thing that just drives me nuts is that, in fact, one of the things I've just heard that the reason that there's a change in the mood of voters is because of the market being down. Now, come on. We get bear markets when I say all the time, I don't mean every year, but on average, we get about a 30% loss in the market about once every 4 to 5 years. So, we've been riding on high for quite a long time, except for the pandemic sell-off that we went through. And man, that was over in no time. But no, this is normal, and it's part of the process. And as I think about it, as I talk to people, I ask them about the rest of their lives. Like, how is your marriage going? Is it always just screaming forward?
I don't know that that's a topic. I don't know that I want to get marriage counseling from Paul Merriman.
So,
as much as I love you,
don't you really hate it when people ask you that question?
Well, it is what my work is all about, is trying to have people develop reasonable expectations. And what leads to terrible returns for most investors who have terrible returns, it's not the market, it's the expectations of the market that they're getting wrong.
That's a great point, actually. Paul Merriman is our guest. Yeah.
Isn't it terrible behavior, though, too? Isn't that a big part of it? Because losses aren't losses until you make them real.
Well, that's true, but the reality is, and I think all of us know this who are trying to help people in whatever way we're doing it, and that is that getting out of the way of themselves, their emotional response to loss, is what gets them in trouble. And we know that people who buy lottery tickets, after they buy it and then they lose, when the odds are, let's say, 300 million to 1 against them, they actually have a moment of despair and sadness because they didn't win.
They didn't
in
win
many
something
cases,
they should
yes.
have won. That would, boy, that's fascinating. 855-935-TALK is our phone number, 855-935-8255. We've got Paul Merriman on the line, along with me and Tom, and we hope you give us a call, 855-935-8255.
Your guides to a really great financial future. Tom and Don are talking real money.
Okay, that was a weird audio train wreck thing. Okay, hi. Hey, welcome back to the program. Don McDonald over here in Florida. Tom over there in the wilderness of Washington. Paul Merriman out living the
On
island.
his island.
Living the
He's on his
island
island.
life.
Yeah, he is,
Paul's with us.
yeah.
Paul Merriman, the author extraordinaire, speaker extraordinaire, guy we really like, and we're glad to have him on the show.
Thanks for being there, Paul.
Well,
I got to
you
ask you a
guys are
question.
Great friends.
I got to ask you a question, though. And so, okay, a couple
now he
things.
has to
First
be
of all, I do
serious.
want to mention that Paul and I are doing a class 2 weeks from today in Bellevue and online called Battling the Bear. And it's going to be a great class.
Oh,
So join us
and
for
wait,
that.
this is so
Dun,
much
dun,
fun.
dun,
They are
dun,
both
dun,
they are
dun,
both
dun,
going
dun,
to
dun,
strip
dun.
down, grease up, and wrestle a bear. I'm telling you, this is
Okay, all
this,
right.
Oh my God, I can't take that picture.
You shouldn't have to. Okay,
I'll
but
tell you what I'm gonna
leaving
bring
that
with
alone
me.
for a minute. Yeah, we're going to talk about that in a minute, but I do have to ask you this question because it seems to come up. There's another article from Dimensional Funds about this came out yesterday about the portfolio that is designed to be the moderate. It works all the time. 60% in stocks, 40% in bonds. You've heard this over and over, the drumbeat going on and on, that it's dead. Dimensional says it's not. What say you, Paul Merriman?
Well, wait a minute. I mean, all 60-40 is a combination of more than half in stocks and the rest in bonds, which is going to give you historically about 90% of the return of the S&P 500 if the stock portion of your portfolio is in the S&P 500. There is nothing unmagic or magic about that. If 60-40 is dead, so is 70-30. If 60-40 is dead, so is 50-50. There is nothing about 60-40 that's important, but it is important to the people that the combination 60-40 is the right amount of risk they're willing to take. They shouldn't have any more, and they shouldn't have any less.
Well, then how do you determine the right amount of risk, Paul? How does someone figure out, because, everybody's just buying a 60-40, because that's what a balanced fund is. So how do they make that determination?
Well, wait. That's not, I disagree with that because Vanguard has balanced funds that are 20-80 and 50-50 and 40-60.
Okay, those are target date.
No. They have balanced funds that do that as well. But the point is that at this thing that Tom and I are going to do next Saturday, I am bringing a table. I'm bringing the table that shows the amount of gain and the amount of loss you're likely to experience with a 60-40, with a 50-50, with a 30. I mean, it all is about how much equity you have in the portfolio. So let me tell you, I'm 50-50. I am willing to lose 20 to 25% of the value of my portfolio. That's what comes along with a 50-50 portfolio, but that's kind of the worst case. But I'm like you guys. I want to hope for the best, but prepare for the worst. So 60-40 is going to be worse than 50-50 or 40-60 or whatever. It's all relative from being very aggressive to being very conservative. There's not anything about any one of those combinations that has anything to do except with the right person to own it.
Exactly. Paul Merriman is our guest, and I do want to mention, Paul, the class is not next Saturday. If you show up next Saturday, you'd be very lonesome. It is 2 weeks from today. So I think that's correct, right? The 5th of November. Paul and I will be doing Battling the Bear.
Well, you had me upset too, by the way.
Okay, I'm sorry.
Well, and for some people, it's this coming Saturday or the next Saturday. So Paul may have spoken correctly from his perspective.
Fair enough. Good. Fair enough. I get that. So you mentioned a couple of things you're going to be talking about. You also mentioned you're going to bring a table and chairs. What else are you going to be bringing with you on for the class?
Bear spray.
I have in my hand I have a set of CDs.
Yeah.
Do you remember what a CD was?
No.
Certificate of deposit?
Yeah.
Doesn't it pay like 2.5% or 3%?
Well,
I don't know.
This is
all right.
this is. Remember, there was a 33 LP.
Yeah.
And
Yes,
then there was
I'm
the
old,
78, and then there
yeah.
was the CD.
Paul,
you
still have
set of
CDs?
CDs.
Yeah.
I knew you were going to say that. This is a magic set of 6 CDs. You put these in your car, in your CD player. Yes, my car has a CD player. And I promise you'll know more about investing than you did before you left home. And I'm going to bring a copy of Financial Fitness Forever. And I'm going to bring a copy of We're Talking Millions for the handful of people who are going to come and see us face to face, because I want to. I've been out here in Zoom land for so long. I'm looking forward to going eyeball to eyeball with some of your folks, and then of course we're going to have a lot of our folks from around the country that are going to be there watching it on Zoom. So
it sounds like the way you said that, it sounds like a cage fight.
Dun, 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 dun.
Now, will you be bringing a CD player?
He said he has one in his car. I have one in my car.
Mine doesn't.
No, my new car won't have one. I don't think it'll play anything. So anyway, but okay. Fair enough. All right. But at the end of the day.
You think I'm pulling your leg?
No, I think it's great. No, we love education. Not at all.
One of the CDs is called The Whole Truth. Now, what do you think is on that CD?
There's a hole in the center, and it's silver.
It says the thing around
the hole.
All right, listen, we're very short on time.
Right,
no, we're not. We got another minute.
We have another minute. What's the biggest takeaway people are going to get from your talk on November 5th? What's the biggest thing they're going to learn?
CDs are obsolete.
My goal is to help people understand how investing works in bear markets and bull markets, all markets, and the steps they should take to make sure, whether they're doing it themselves or they're doing it with a professional advisor, that they're doing the right thing for them personally. That's my goal, and I promise I will work as hard as I did when you and I worked 20 years ago, Tom. I'm ready to go in fact, I'm ready to go toe-to-toe with you. I'm looking forward to that.
Ouch. I'm telling you, it sounds more like a cage fight every minute.
I'm bringing my son. I'm bringing a few of my grandsons. I'm going to line them up there. That's going to be tough. All right. So, no, in all seriousness, thank you for joining us today, and thank you for being part of the class on November 5th,
Thanks.
of which you can sign up for at TalkingRealMoney.com.
Really
It'll be great. It really will. And we're going to do a different format, because Don told me this. We're just going to get up and do it. We're not going to have it's going to be more back and forth, more interactive, a real cage fight, as Don puts it. So register now, TalkingRealMoney.com.
All right, Paul, thank you for being a part of this beatdown.
Guys.
We appreciate the fact that you take this so well.
He does. He's a good man.
Yeah. And please take care of all the Bainbridge Islanders.
It's nice to know some young people. Yeah. Okay. Take care, guys.
All right, Paul.
Yeah. We'll see you in a couple of weeks.
Young people. Look at the two of us.
Young bucks, yeah.
All right, compared to you, maybe, Paul, but not the rest of the world. You're and don't miss this. This could be your last chance to see Paul in person. The way things are going. 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Who doesn't want to see a couple of grown men get down and dirty with the big bad bear?
Big old dumb bear.
You know you don't want to miss this.
That's a big dumb bear. Come on, that's going to be easy.
Paul Merriman, Tom Cock. Don't miss it. In the center ring, battling the bear.
2 weeks from today, Saturday, November 5th. In person in Bellevue, online, register at TalkingRealMoney.com. Did I say that quicker? Oh, we still have a few more seconds. There'll be actually some things you can learn there. I know we had a lot of fun with this. But
no, it actually is. And Paul has, he has numbers. Lots of numbers. So go to TalkingRealMoney.com and sign up.
We hope you realize realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.